welcome to the midweek trade right here in Lagos, Nigeria. This is Business Morning. Today we'll check on the pulse of the consumer goods industry in Nigeria and also some of the latest circulars from the Central Bank of Nigeria and much more. But first, let's do the markets now. Let's see, oil prices are down for the midweek trade, extending this week's losses and trading near a 4-month low hit in the previous session on signs that more oil tankers stranded in the Gulf since the start of the Iran war are set to move out of the Strait of Hormuz. And we see another big 1% drop there. Brent crude 76.17 per barrel, 1.18% lower. And we see WTI crude also down 1.17%. I guess we'll see if $70 per barrel, if that holds for this week later on. All right, so we see both benchmarks decline nearly 1%. That was yesterday, touching their lowest levels since early March. Prices have come under pressure this week after Washington granted Iran a 60-day sanctions waiver following initial peace talks, allowing it to sell oil, and as hostilities in Lebanon, that's easing. So we'll take that. Oil prices, the shorts are winning at this point for this week. To another top story this morning, the Dangote Refinery is firing back, calling recent allegations of supply chain manipulation a web of falsehoods. Reports recently surfaced claiming that fuel exported from the facility was being re-imported into Nigeria via a ship-to-ship trading hub in Lome, Togo. In a statement released yesterday, the refinery management flatly denied these claims, asserting that the logistics don't add up and that there's no commercial or trade flow evidence to support them. The refinery is doubling down on its commitment to local supply as this controversy continues to stir the energy sector. We'll definitely keep an eye on that one going forward. And Nigeria and 8 other countries account for 83% of global gas flaring in 2025, according to the World Bank's latest global gas flaring tracker. The report shows gas flaring rises for a third straight year, reaching a 6-year high of 167 billion cubic meters, despite global efforts to curb the practice. Russia, Iran, Iraq, Venezuela, Mexico, Libya, Algeria, Nigeria, and the United States are responsible for more than 4/5 of gas flared worldwide. In Africa, Libya, Algeria, and Nigeria remain major contributors, collectively flaring over 25 billion cubic meters last year. Nigeria's upstream regulator says about 6.08 billion cubic meters were flared in 2025, slightly below the World Bank's estimate of 6.6 billion, citing differences between satellite and field data. The Commission says Nigeria remains committed to ending routine gas flaring by 2030 through gas commercialization programs. All right, let's check on how your money performed yesterday. Nigerian equities market is keeping up the pace. Stocks pushed higher for a second consecutive trading session. That was on Tuesday. Fueled by steady buying momentum, the all-share index climbed over 2,500 points, a solid 1.06% yesterday. 240,000 level reclaimed. And we see the equity cap 154.4 trillion, 1.07 higher, pushing the total capitalization higher there. All right, let's see other parts of the market now. Let's see trading activity. That's for yesterday. We see volume traded 564.88 million stocks traded yesterday, valued at 39.33 billion naira. Deals 49,147, much lower than the previous trading session that we see for top trades. Fidelity Bank, Zenith Bank, there. Financial services topping with 59.37 million traded for Fidelity Bank. Then we see Dangote Sugar, that's consumer goods there, 43.12 million traded, with Zenith Bank coming in second. So that's the picture yesterday. Top gainers, we see Airtel Africa, yes, a 10% gain yesterday, closing at 4,358 naira. I did see some buyback. They've been doing the buybacks for the longest time, and over 200,000 units were bought back, and that was in the London Stock Exchange and some exchanges in London that serve Europe. International Energy Insurance also there, 9.89% higher. Flip over to the laggards for yesterday. Red Star Express, 9.96% lower. Premier Print, 9.93% lower. And we see closing at 13 Naira 40 kobo. So that's the color for yesterday. And definitely we'll see if the midweek trading session, continues in the green. It's hump day right here today. All right, so other matters now. We see Nigeria is making major moves in regional commerce. New data confirms the nation's intra-African trade that surged to a massive $9.02 billion in 2025. According to Afreximbank's 2026 report, that's a 21% jump from the previous year, solidifying Nigeria's position as a powerhouse of African economic integration. Experts point to the African Continental Free Trade Area, that's AFTA, as the primary catalyst, helping exporters break down barriers and reach new markets across the continent. As trade ties deepen, Nigeria is clearly setting a pace for regional growth on the continent. And to other matters now. The president of the Abuja Chamber of Commerce and Industry, Mr. Adesoji Adeshuba, says Nigerian businesses must innovate to survive economic shocks. Mr. Adeshuba was speaking at a news briefing to announce the 21st Abuja International Trade Fair at the Secretariat of Chamber in the nation's capital. He says this year's event is designed as a survival toolkit for businesses facing tax changes, tech disruptions, and economic uncertainty. He notes that the fair will bring together manufacturers, investors, policymakers, and diplomats to forge new deals that will transform the nation's economy. Take a listen.
The 2026 Abuja International Trade Fair will focus on promoting trade and investment opportunities, facilitating discussions on taxation reforms and their impact on businesses, showcasing innovative products and technologies, strengthening business-to-business and business-to-government engagements, encouraging economic diversification and providing a platform for policy advocacy between the private sector and government institutions. This year's edition is expected to host over 500 exhibitors, showcasing more than 10,000 products, solutions, and services, while attracting approximately 100,000 visitors and participants during the 12-day event.
As a major call to action for tax professionals, you see the Chartered Institute of Taxation of Nigeria, CITN, they're urging all practitioners to ensure full compliance with national tax laws. At a presentation of practice license to 95 certified tax practitioners, the Institute emphasized that professional integrity and strict adherence to regulatory standards are vital to strengthening Nigeria's tax administration. The clear message says professional accountability is a cornerstone of a sustainable economic framework. Take a listen.
Nigeria's tax reform receives a boost as the Chartered Institute of Taxation of Nigeria recognizes new members by giving them practice license, which they say is a sign of the transition from professional qualification to professional practice.
The tax profession, as we all know, occupies a strategic position in every economy. Tax practitioners, that you're going to be in a matter of minutes, serves as critical partners in nation building by promoting voluntary compliance, supporting businesses, advising governments, and contributing to sustainable economic development.
The new practitioners are given tips to prepare them for the reality Nigeria's tax environment.
Permit me to sound a clear note of caution. The Institute will not hesitate to apply disciplinary measures where cases of misconduct are reported or established. Our investigation panel and disciplinary tribunal remain vigilant and empowered to protect the integrity of the profession at all times.
In 2023, we didn't know that we were going to be operating a new set of tax laws, for example, even though it has been canvassed and people have complained. But here we are. We wake up in 2026 and we are in a whole new environment. Whole new environment because the entire regulatory environment has suddenly changed. Okay, apart from the regulatory environment changing, we also now are in a new technological environment. And unless you are able to blend into this new environment, both from a regulatory standpoint as well as the technological standpoint, you will struggle as a practitioner in this era.
That I shall always,
And then they take their oath
promote the image and growth of this city.
and are formally certified.
All right, now to our first conversation. As Nigeria navigates a complex economic landscape with inflation ticking up to 15.93% in the recent data, consumer wallets are under persistent strain. We're asking, what does the modern Nigerian consumer really look like, today? We're dissecting the battle for the shelf. How are, FMCG giants balancing the tightrope of affordability against the need for profitability? And what sets the thriving market leaders apart from those struggling to stay afloat? Joining me for this conversation, we have Mr. Narendra Nagaka, as the CEO of Botchins PLC, a diversified Nigerian conglomerate involved in manufacturing, trading, distribution, and industrial services across multiple sectors. The company is part of the broader Botchins Group, which has operated in Nigeria for over 150 years. Great to have you on the show, sir. Good morning.
Thank you for having me.
Wow, that's a long time.
Yes.
150 years. That means you've gone through different cycles, economic cycles in the country, different precedents. That's incredible. What's it been like so far?
I think it's been a beautiful journey in a great country like Nigeria. 150 years, transiting from core trading to supermarkets to now manufacturing, now becoming one of the leading woven sack manufacturers in Nigeria, also into the automobile sector, mostly into the 2 and the 3-wheelers businesses. I think it's been a huge journey for the company, for the family, and we are thankful to Nigeria. I don't think I can say anything more than that.
Right, but what do you think keeps a company steady in a country for over 150 years? Is it profit? What keeps a company?
I don't see that profit is the only driving force after 150 years. The focus of the management has been how can we create families, how can we create a structure which can help people grow in the organization, and we make an organization which is conducive to people. 150 years plus, profit becomes one of the factors. We have employees who have worked with us for more than 35 years, more than 40 years, so they're part of the family. And that's what, kicks us around and it makes us relevant. And one important factor is that with the changing times, we changed. And that is what has kept us relevant even today after 150 years.
Yeah, so I guess for a company to stay on for over 150 years, when you see change in your market, you find a way to change, with the times. Quite interesting. And talking about change, looking at inflation, over the years, we've hit highs and, lows, but I guess for the average consumer, it'll feel like we've seen the highs for the longest time. We keep paying more, for stuff. And looking at headline inflation now, the one for May, 15.93%, food inflation at 17.8%. This is after rebasing though, but now they say we have, what to look out for when we're comparing, inflation data. GDP growth, 3.89%. I'm sure in the company's operations, you saw GDP growth much higher than this at some point, maybe 6%, 7%, GDP growth. But now we're celebrating 3.89%. So it shows that there's some pressure, right there. So Looking at, consumers at this point, their disposable income is being torn apart from different sides. How has the consumer, the Nigerian consumer, evolved over the years, in your view?
I think I would like to say here that the Nigerian consumer, we need to take our hats off for him, because he is, and I am not biased when I say he, it could be he and she. They have been very, very, very accommodating. They have been very smart. They have been very adjusting. They have seen the highs and lows, and probably the low that we saw a couple of years back created or probably trained the new generation to adjust to what could happen to an economy. And hats off to them again, and to the Nigerian government for bringing us back into a relevant mode where we can see a good future for the country. We are now in a stage where we have been stable in terms of forex for a long period of time. This gives a very positive signal to the industry. The industry would then bring in investments, and that would be a very positive sign for the consumer going forward. Because if the industry invests, there's employment. Employment brings in a lot of funds into the market. The funds brings in a lot of stability, and products would get innovated to the needs of the consumer. Because as we have seen in the last at least 5 to 7 years, the consumer industry has moved towards smaller packs and smaller packs and smaller packs to fit into the pocket of the consumer. Because what was affordable probably 5 years back is out of the pocket range for most of the consumers today. But thankfully, the innovation of the industry has helped the consumers to manage and also ensure that they give a positive signal to the industry that we are with you.
Right, and talking about trying to meet the consumer where they are when it comes to affordability, there's also that talk of shrinkflation, where the packages get smaller, but somehow they stay at the same price. What do you think is the way around that? For most of these other companies.
Shrinkflation is a terminology which came up with the so-called marketing, and it was more of, as you rightly said, adjusting to the pocket. Probably a 1 kg pack was not affordable because with the forex rates floating around, you would not be able to sell it at a price which a consumer could afford. So you keep a benchmark of the previous price and reduce the grammage to an extent where the consumer can still buy it. But there are smaller packs also. There are packs which like if you take I think the best example would be in the powder milk segment, where the sachets have been operational in Nigeria for more than 20 years now, thanks to some of the few companies who initiated this procedure and the market innovation. I think that's the way forward, adjusting to the pocket of the consumer and making sure that at least his daily needs are met in a proper way.
Right, and you did mention, stability, when it comes to the forex market. It's been a while. We've been stable for quite a while now. Do you still have flashbacks sometimes to the time where, we'd see the currency, fluctuating against the dollar? We got as weak as 1.8. These still
to a point.
Almost touched 2000. We're almost there. We're on the verge of that. Do you get flashbacks sometimes to those times?
We would, as an industry, look at these things as learnings. What we have seen, what we have learned through this process. I don't think we need to give any knee-jerk reactions to these things, but it's good to be prepared. I'm sure this will not happen again, as they say in Nigeria, by the grace of God. But I would say that this has given us a lot of lessons and made us more prepared. I think that's the only way I would like to put it.
Right. And how would you describe the business environment, say in the last 2 to 3 years, so far in Nigeria? Would you say the business environment is encouraging you to bring in more money, into Nigeria?
Yes, definitely. Not only from the sectors that we work with, but across sectors, we are seeing a lot of positive vibes. Even when we travel outside, we hear good things about Nigeria coming back on track. And that is an indication which shows that investments will definitely come into Nigeria. It's already showing, if you look slightly far, the investments are already coming up. You would see across industrial areas, development is happening. So that's a very, very positive sign for Nigeria.
All right, let's look at balancing affordability, with profitability. You did mention, trying to meet, the consumers, where they can actually afford this. But how much are you willing to take, to make sure the consumer is able to stay, able to afford, stuff?
Yeah.
How do you balance that? Affordability, profitability?
It's a very difficult question, and I don't think there's a one-line answer to that. It depends on what product category you are in and what level of qualities you would be providing to your consumers. So if you're providing a very premium quality product, there would be a slight limitation in terms of how much you can reduce the size. I'm talking from a food perspective, where shrinkflation, as you rightly said, till what level can you do that? Otherwise you become irrelevant for the consumer. On the other side, there could be, options B and option C available to the made available to the consumers, and that would also give them a second stage of affordability. So you could probably look at, just for an example, from a full cream milk to a filled milk, which could be two different variants available at different price positions and at different pack sizes also. So there are different ways and means at which you can create those structures to remain relevant for the consumer.
All right, so definitely we have investors, local, international investors that might be looking at this sector and saying, I might be able to make some profit in here. For you've been here the longest time. Do you think other investors are looking to come into this market in Nigeria?
Yes, I would not be very sure about which sector, but yes, a lot of food and infrastructure companies are coming into Nigeria.
And you think they're actually, optimistic, that
yes,
because I'm trying to understand, a cost of living crisis. When a country has a cost of living crisis for a long time, it almost seems like a discouraging factor, for an FMCG player that's trying to come into that market. Is that what it's like normally?
If you understand the market, if you have studied Nigeria a bit, at least for the last 5 to 10 years, and I'm sure most of the companies who are putting their money in here have done their homework before coming in. Nigeria is a unique market. You cannot treat this as any market around in Africa or around the world. So if you have the understanding of how this market behaves, you can make your innovations to fit into the pocket of the consumers in Nigeria. I don't think we have reached a position where it's a dead end. These are phases which every country passes through at some point in time, and I'm sure we'll cross this bridge very fast.
Right, and when you say the Nigerian market is unique, looking at other markets, other countries, which ones would you say are as unique as Nigeria?
I don't think there is any market which is a replica of Nigeria. Because Nigeria has volumes, and as we all know, Nigeria is the most populated country in Africa. With that in mind, the volume of FMCG business that happens today is in the range of about $30–35 billion. If you compare that to South Africa, which has half the population and double the volume, which means there is huge scope. And the more we improvise and localize things, I think the growth is the only way forward.
Right.
So I'm very, very optimistic.
Okay, and you did mention the population there, quite a number. And looking at, if you try to compare, the population of Nigeria, with the economic indicators, definitely you see there's a mismatch, somewhat looking at the GDP growth and, population, growth rate. So from where you are right now, what are you seeing in the next 10 years, for this industry, knowing fully well that one president comes, another one comes, another party takes over. So, we have all those policy flip-flops and all of that. Well, what are you seeing?
Over the last 70 years, Nigeria has seen so many people come and go, done good jobs and bad jobs. But the people of Nigeria have been resilient and have stuck to their guns and ensured that they live their lives to the extent possible. These numbers are indicators of what we are seeing today, but not the indicator of what we can see in the future. With what is going on and in terms of investments coming in, I see these numbers growing phenomenally in the next at least 2 to 3 years. And that would be a very positive indication to the world that Nigeria is open for business, and we would be in a better position if we are able to talk maybe 2 to 3 years from now.
Right, and definitely we're trying to become a manufacturing power hub.
Yeah.
In Africa, we've seen what the likes of Morocco, they've been able to achieve, when it comes to, manufacturing and production. Have you seen any improvement when it comes to power? Because power supply, that's a major, that's what you need mostly for manufacturing and production. Yeah. Have you seen improvements over the years?
Not exactly. Power has been the major challenge for any major industry to come into this country. I think 2 factors. One is power and one is the road infrastructure. If these 2 things are improved, or even if the industry sees that there is a positive effort in that direction, it will change a lot of things, and probably the flow or the inflow will improve. Today, power is a bottleneck, because if you have to put up a factory or a manufacturing setup which is of a large size, you would have to generate your own power, which becomes a bottleneck, because that adds up to your production cost, and that makes it incompetent for you to work in this, at least in the neighboring countries.
And is renewable energy helping the situation at all?
I don't think we are there as yet.
Well, it shows some prospects there.
Shows prospects, but again, a lot of investment is required.
Right. Okay, so talking about moving goods around, you've produced the goods, you're trying to get it across the country. How's that looking so far?
Better from before. Some of the initiatives that are coming up now should give us results in the coming 1 or 2 years. But from the perspective of what we used to see about 10 years back to today, there's a definite improvement.
All right. So let's imagine you're in a meeting with the president, right now of Nigeria, and he says, what, tell me all you need now to make business easier for you and make you bring more money into Nigeria. What would you tell him?
3 things: power, electricity, security. These 3 things will change the game.
Change the game.
Yeah.
Forever. Fantastic. I guess that's a good place to anchor it. Thank you so much, sir, for joining us today. Mr. Narendra Nagaka is the CEO of Botchins PLC. Thank you for coming on today, and hopefully we solve those 3 problems soon.
Thank you, Mr. Ladi.
Fantastic. Thank you so much, sir. All right, we'll take a moment now. When we come back, we check on some of the circulars from the Central Bank of Nigeria. See the latest one. That's in a moment. Just stay with us.
Students from the Federal Capital Territory and environs converge on the Central Bank Auditorium as part of the bank's effort to protect the nation's currency, the Naira. The club is designed to transform selected students into advocates who will champion responsible currency handling in their schools, homes, and communities.
By engaging you today, we at the Central Bank seek to build a nationwide network of informed and responsible ambassadors who will continuously advocate for and promote respect for the Naira among your immediate cycle and peers.
The establishment of the Naira Ambassadors Club reflects the bank's conviction that meaningful behavioral change begins with education. Young people possess enormous capacity to influence positive attitudes within their homes, schools, communities, and across society.
The central bank governor believes that engaging young people is the most effective way to achieve long-lasting behavioral change and reduce abuse of the national currency. He shares his excitement at how the club will grow into a powerful platform for promoting financial literacy, civic responsibility, and patriotism across Nigeria.
The central bank continually invests significant resources in producing clean, durable, and secure banknotes to meet the needs of our economy. However, the effectiveness of this investment depends largely on how members of the public handle the currency after it enters circulation. To launch and unveil this particular noble initiative.
These young Nigerians have now been empowered with the knowledge and values to become advocates for proper currency handling within their schools, families, and communities. Sarah Achimugu, Channels Television News.
All right, so meanwhile, we see the Central Bank of Nigeria have launched the Naira ambassadors there to promote, proper handling of the Naira. So try to handle the Naira properly, going forward. All right, to all the conversations now, the Central Bank of Nigeria has introduced a new market structure requirement aimed at reshaping the country's payment ecosystem. The new framework that seeks to address concerns around market concentration, operational dependence, ownership transparency, and data sovereignty within Nigeria's rapidly expanding digital payments industry. And definitely, we're seeing new rules and, different people, different quarters reacting to some of these new rules. Joining us to unpack the implications now is Pelumi Esho, the CEO and founder of 91 Payments, a cross-border payments and remittance infrastructure company operating, across Nigeria. Great to have you on the show. Good morning.
Good morning. Thank you for having me on the show.
So definitely, we know the CBN has been quite busy, yes, especially in the first half of 2026 and in most parts of 2025. Yes. The recent reforms now, the CBN says these reforms are aimed at reducing concentration risk, and improving resilience in the payments ecosystem. From your perspective, what problem is the regulator trying to solve? And is this approach the right way?
Okay. Thank you for having me on the show this morning. So yes, I believe this approach is right. To put things in perspective, Nigeria is #1 in Africa when it comes to instant payment. In 2025 alone, we processed 1.2 quadrillion Naira in transactions. That's about a 70% growth from what we processed in 2023. And the projection is that we are going to grow at 22% and above. With that kind of exponential growth, the expectation is that regulation is also tightened and there's a better oversight over the transactions that are executed within the ecosystem. And to also improve consumer confidence, Nigeria has a population of over 240 million. To be able to safeguard the financial ecosystem, it is important that regulation is tightened and oversight is improved as well.
All right, so the core thesis, we see some have argued for these rules, while well-intentioned, they say it could create settlement bottlenecks. Explain to our viewers now, how could measures designed to improve competition end up complicating, cross-border capital flows, into Nigeria?
Yeah. My view is that this is actually positive. It's a positive signal to the global institutions and would rather improve capital inflow into the country rather than reduce it. If you remember, Nigeria was removed from the FATF list in October 2025 after being placed in 2023-2024 because we were deemed as not being compliant with anti-money laundering rules. Improving the global standard and tightening what is needed to increase transparency only sends a positive signal to the global institution. And the implication of a positive signal when they feel that they are able to easily assess what's our data, the implication is they are then able to bring in more capital inflows into the country. So it's positive rather than negative.
All right, so definitely positive for you and maybe some other players, in Nigeria here. But looking at the global investor sentiment, how do you think international investors, because they typically value predictability and ease of settlement, do you think they'll be on board also with some of these new rules?
Yes, absolutely. Like I mentioned earlier, clarity of data, as you know, with the memo, the CBN has mentioned that data is imported from whatever global or foreign global infrastructure people use to become local. That means the CBN is able to have better oversight over the data of transactions for Nigerians. It means whenever there's an investigation by global institutions, there's easy access to data through the CBN or through the right channels. And it's a positive sentiment overall to the market.
All right, so looking at where we are now when it comes to financial inclusion, definitely we've been trying to bridge that gap, for the longest time, also trying to, get the rural areas, included. Have you seen any improvement so far, when it comes to, getting, the rural parts of, the society actually included when it comes to financial services? Are they getting the service they deserve so far?
Absolutely. Let me use a simple example. If you think to 5 years back, if you're buying fruit from a local vendor on the road, you probably have to have cash. But now, with the innovation of different payment methods, WhatsApp payment methods, QR ways to make payments, we see that the everyday man on the streets is using the POS, is using the e-payment system. When I think back to before pre-COVID, financial inclusion was about 20%. Now that has tripled to above 60%. It means that even if initially the journey to using cashless system or e-payments wasn't easy, it means that it's now easier for people on the everyday man on the road to be able to use e-payment systems. So I mean, you would agree with me that financial inclusion is better with the innovation of simpler products that make payments as simple as ABC.
Yeah, I've actually experienced that, so far. If you're buying, food from the markets or, from the average seller on the streets, they have an account these days, some fintech account.
And they have a POS as well.
And they even have POSs, so it's quite good, seeing the improvements so far. Let's look at data localization now. The circular requires all payment transaction data generated in Nigeria to be stored on Nigerian servers. That's by January next year. How are you seeing that?
So, again, it's to improve oversight and have easy access to data for possible investigation. However, there might be a few bottlenecks in that, considering the infrastructure of the local providers that we have, how ready are they to, one, safely store the data that we have? How are they able to manage the bottlenecks of things as simple as connectivity issues, or even access to energy or lights to be able to keep their data center up. So it will be interesting to see the local providers that are available and how resilient their infrastructure is to support the kind of data that will be imported by payment platforms or institutions to become local.
Right, so the deadline is supposed to be January 1st, 2027. Is that enough time?
Well, that leaves to be said. We'll see. A lot of payment institutions, such as myself, are running and working towards complying with the memo. Some of the things that we need to implement is bringing on board more data engineers to be able to handle the transfer of that data to the local centers, and again, looking for the right partners to use.
So does that mean more costs, for, some of the fintechs at this point? You did mention getting more engineers.
Yes, absolutely. That's more cost to be able to get the labor and the manpower for the transfer, and also rewriting our regulatory frameworks to be able to meet the local standards as well.
Right. So let's imagine the deadline is here. You've had to, employ more engineers and, get more people to help with this data. Okay. So who bears the cost? Will it be the fintech companies, or are we seeing the consumers bearing the cost?
With the recent memos that we have, CBN has mandated that the cost of transactions is shown to the consumers beforehand. So no, there would be no increase in fees for the consumers. The fintechs, financial institutions would have to bear the cost.
All right, definitely. We'll keep tracking that going forward. So let's look at stable coins now and alternative rails. We see the IMF estimates that Nigeria recorded roughly $59 billion in stablecoin inflows, within the year. Is there a risk that additional friction, within traditional payment rails could accelerate the migration towards stable coins or other, alternative settlement mechanisms? Because, we've heard some quarters say they see bottlenecks, when it comes to, some of these new rules.
So it's no surprise that we have processed that much in transactions. We are the giant of Africa, and Nigeria owns 60% of sub-Saharan Africa transactions when it comes to stable payment. Well, to your question, when we consider the friction within the payment system and how it might encourage people to move more towards stable coins, the recent memos and policies has actually improved the friction within the system. You mentioned earlier how the exchange rate was very volatile. Now we've witnessed a very stable exchange rate. It means that businesses are able to properly forecast their cash flows, right? So that friction isn't as much. Things are pretty stable. However, we can't deny the use case of stable currencies. They are here to stay. They serve as ways of making payments very seamlessly. And we've also seen the CBN and SEC work towards regulating that part of the system.
All right. So, we're seeing smaller players in the industry. Definitely, they would have to also comply with some of these deadlines. There's also the one for December 2026. So operators will have to adjust. And can we do you think there's a possibility there'll be maybe they might unintentionally favor large, institutions over the smaller fintech firms, if some of these rules are actually, put into law?
Yes, it will favor the larger institutions. And what we might see is, because there are a lot of very small financial institutions in Nigeria, what we might see is those smaller institutions coming together to become one so they can have the capital base to be able to support the requirement. And from what we've noticed as well, with the new requirements for capital, not only in the financial institution space, but for the asset managers of financial houses, it's very glaring and evident that the CBN or the regulators wants to ensure that those that handle these financial institutions have the power and the capital capacity to be able to take in shocks and comply with regulations.
All right, let's look at correspondent banking now. We've already seen some, global banks, scale back correspondent banking relationships across Africa, because of rising compliance costs. Could this circular exacerbate that trend for Nigeria?
It's more positive rather than negative. Like I mentioned before, we've recently been removed from the FATF list, the grey list. Now we are green. That's very positive. And with the kind of growth that we expect for our payment system, what we want to be doing, or what the regulators should be doing, is increasing oversight and improving transparency of the financial ecosystem. So it's what the correspondent banks will be comparing is not just the regulation, but the revenue versus the cost of the regulation. But if you ask me, transparency and oversight wins the day.
All right, so looking ahead, what would successful implementation, look like for most of these circulars?
So there have been clear deadlines, timelines for when we are to comply. Success would mean being able to implement these reforms or guidelines before the deadline, and also being prepared for possible changes, which is going to happen.
Right, and that means you have to put some, cash aside to help augment some of the costs that would come with this.
Yes, absolutely.
All right, thank you so much. It was great having you. Pelumi Ensure is she's CEO founder, 91 Payments. Thanks for coming on today.
Thank you.
All right, let's look at some of the four pillars of the circular from the Central Bank of Nigeria. It's looking at market structure, concentration caps. Any institution with over 25% market share in card issuing cannot hold about 25% in merchant acquiring, and vice versa. It applies to the entire corporate group, subsidiaries, affiliates, and related entities of all counts there. Data localization, we also talked about that. All payment transactions data generated in Nigeria must be stored and managed on servers within Nigeria, not international servers. Then ultimate beneficial ownership, UBO disclosure. All deposit money banks, PSPs, MFBs, MMOs, and other licensed operators must disclose and maintain up-to-date UBO records. So the circulars are a lot, and definitely we keep tracking all of them, and we'll keep discussing them as we go on at this point. All right, let's see what's happening in the global space. All right, if you've been following some of the IPOs, the latest one, SpaceX shares closed nearly 1% higher yesterday, snapping a three-day skid during which the stock lost nearly 24% since its IPO. Shortly after the market opened, shares slipped below $150 per share, the price of its first trade when it debuted nearly 2 weeks ago. The early slide also took the market cap below $2 trillion. Elon Musk's space and artificial intelligence company saw a $400 billion sell-off on Monday, tanking 16%, following drops of 3.6% and 5% the previous 2 days of trading. SpaceX posted huge gains after a record-breaking IPO on June 12, briefly surpassing Amazon, Microsoft in market capitalization before falling back below both as sentiment cooled. We see now, let's get a sense of what played out in the U.S. markets. That's for yesterday. Our correspondent, Mary Bird, has more.
The U.S. stock market showed a bit of a slide on Tuesday, as many investors were concerned about memory chip markers, a part of the AI industry, as the doubt has caused some major impacts on the U.S. stock market. As the Dow Jones was just below flat line, the S&P 500 fell at 1.4%, and the heavy tech Nasdaq took the largest hit of the day at 2.1% down. As investors continue to watch the market, as it showed some volatility on Tuesday, but there's much hope that we could see some rebounding in the next days or weeks ahead.
Thanks so much, Maria. Well, President Donald Trump said Iran will be able to use funds released from frozen accounts only to purchase food and medical supplies from the U.S., seeking to ease concerns about peace negotiations that both sides say are making progress. Yet Trump's comments were disputed by Iran. The latest example of the two sides making conflicting claims about key issues, including the status of nuclear inspections. I will see U.S. President Donald Trump has instructed the Department of Justice to look into oil companies over not lowering gasoline prices in line with falling oil prices. The big oil companies are not dropping their price at the pump commensurate with the sharply low prices they're paying for oil. Customers are being gouged there. And the president says he's instructed the DOJ to immediately start looking into this. Trump said so in a social media post. Yeah, that's on Truth Social. So you see the oil prices are coming down, but fuel prices are not coming down as fast. All right, to other countries now. Australian Consumer Price Index inflation grew less than expected in May, pointing to some cooling in price pressures and furthering the case for the Reserve Bank to hold interest rates. But underlying inflation, that rose in a month and remained well above the RBA's annual targets, a trend that is likely to keep the central bank there hawkish in the coming months. CPI grew 4.0% year-on-year in May, less than expectations of 4.3%, and also less than the prior month's reading of 4.2%. And that's according to data from the Australian Bureau of Statistics released today. And Thailand's central bank, they've kept their benchmark interest rate unchanged at 1%, in line with market expectations as policymakers balance supporting economic growth against inflation risk. The decision reflects the Bank of Thailand's cautious approach amid global economic uncertainty and mixed domestic growth signals. Officials say the current monetary policy remains appropriate to support the economy while maintaining financial stability. And Poland's unemployment rate fell to 5.9% in May, highlighting the resilience of the country's labor market despite ongoing economic uncertainties. That's across Europe. The decline reflects steady job creation and a strong demand for workers in key sectors of the economy. Analysts say the lower unemployment rate underscores Poland's relatively robust economic performance and could support consumer spending in the months ahead. $925 according to investing.com, up about 8 basis points. Stocks getting attention. We have Link Assurance, First Holdco up about 0.82% in trading right now, early trading. Zenith Bank, that's on the flip side, down about 0.20%. Japan Gold Vouchers is also getting attention, and FCMB down about 0.49%. So that's giving us some direction on what to expect for the markets, but it's positive, but not convincingly positive yet. We still have more trades to go. Bitcoin, that's trading at $62,000 after losing the $64,000 level. Yeah, that was about yesterday and day before yesterday. We'll see if we can recover there. Gold, that's lying right flat on at $4,000 per ounce, about $4,083. It's looking like we might lose that 4K level. It's not lost that in a while. Asia markets looking much better right at this hour, but I'll bring you more updates on Business Incorporated and what driving sentiment. We'll try to look at the key levels to watch for most of these asset classes, especially Bitcoin and gold. We're seeing oil again heading for another weekly loss at the rate it's going right now. So we'll bring you more updates on Business Incorporated by 1:30, and also what's playing out with other bourses that we track. Thank you for watching Business Morning today. I'm Ladi Williams from here, the team right here at Channels HQ's. Bye for now, and try to buy high and sell low.